Let's talk pip talk. Let's talk pip talk. Understanding pips. A pip is a percentage in point, also known as a pip or point. A pip is a unit of measure that expresses change in the value between two currencies. The pip is the fourth decimal place on the exchange rate unless it's the yen, which is the Japanese yen. Then it's the second decimal place. When the currency exchange rate goes up or down, there must be a unit of measure to measure it going up or down. The base is to the left and the currency is to the right. When the chart is up, the base currency is up and the term currency is down. When the chart is down, the base currency is down and the term currency is up. Let's look a little bit deeper into this while I'm talking about it. So understanding pips allows you to calculate the profit that you will receive from adding or subtracting your pips from your entry point to your take profit, depending on if you are in a trade for a buy or a sell. You can also calculate your losses ahead of time by following the same procedure.